Good morning, traders. It is the 22nd of June. We are Signal Centre talking bull. I'm Joe, neighbour, joined by Jamie Pakenham-Walsh and Steve O'Hare. Good morning, gents.
Good morning.
Morning,
How you
Joe.
both
Morning,
doing?
Steve.
Yeah, not too bad. Not too bad.
Yeah, pretty good, thanks. Pretty good.
Excellent. Good to hear it. Welcome to anybody watching this morning. We're pleased to have you here. We will get stuck into the latest headlines to keep you up to speed with what's happening on this trading day and hopefully set you up for the day with a good look at some technical price action as well. So first up, let's get into the headlines. We've had the Fed continue to watch inflation expectations closely. In comments yesterday, Richmond Fed President Barkin stated that he thought a 75 basis point rate hike was possible at the June meeting after the latest University of Michigan Consumer Confidence Index recorded an increase in long-term inflation expectations to 3.3% from 3%. We saw risk appetite continue to dip again. We saw that price was pretty stable on Monday due to the fact that the US were off. We saw a bit of follow through on the upside yesterday, but that has failed to hold, further highlighting the weakness in the markets at the moment and that the bears are very much in control. We saw the yen recover slightly from 24-year lows, although it looks very much under pressure still. And the Bank of Japan remain committed to ultra loose monetary policy. In terms of, again, back to the US markets, we'll be watching Chair Powell's testimony to Congress closely today, with his rhetoric and guidance having an important impact on rate expectations and moves across all asset classes. This morning, we had the latest read on UK inflation, and that hit a fresh 40-year high. The UK CPI inflation number increased to 9.1% for May from 9% previously. However, that was in line with market expectations. There was a slightly larger than expected decline in the underlying rate to 5.9% from 6.2%. One of the chief economist in the UK, Peel, stated that he sees further policy tightening in monetary policy, with the bank ready to act if there is evidence of persistent price pressures, although he added that the bank faces a narrow path between persistent inflation pressure and recession. So plenty going on already this morning. Most notably, I saw actually in commodities, and I'm sure Steve will come on to that shortly. But Steve, do you want to kick us off with a look at maybe Bitcoin to start?
Yeah, I'll take a look at Bitcoin to start, Joe, as normal. So without sort of change the agenda too much, Bitcoin, toilet coin, I like to call it now. Nothing to do with Bitcoin, but you could sort of find some sort of humor in there somewhere. Yeah, it's really, really struggling to bounce from this support that we found around about the 19,750 level. This week's been quite quiet overall. The range is 2,000 points, not a lot for Bitcoin. But let's sort of like drill down into what's happened over the last couple of days. Really indecisive handle after a positive day on the 19th. The 20th stalled, made a new high compared to the previous 2 days. And then we looked like we were recovering quite nicely yesterday, got up to 21,660 on this chart and reversed really sharply into the close. And we've had a negative follow through overnight. So looking at the short-term chart, drill down to the hourly chart, we were building a nice little trend line here, nice little angle. Didn't look too shabby at all. Almost looked like we're putting in this this bottom pattern. Still potential for that. We're actually at this point here may prove quite pivotal. We got this low back on the 15th of June. If we manage to hold on here and bounce, we'll get a nice little inverse head and shoulders formation. So that could be really interesting. So I'm not saying it's completely over yet, but this reaction down from the attempted rally stalled in front of the 4-hour Ichimoku cloud here. Ichimoku cloud, one of my favorite indicators. Check it out. Bearish engulfing on the 5 o'clock candle yesterday, and the reversal looks pretty solid now. So if we manage to get below the 19,500 level, then we could really open up an attack on the lows, only 2,000 points away, which is nothing in crypto terms. Let's take a look at commodities. I see a couple of people asking about gold, one of my favorite commodities at the moment to analyze, not so much as in favor as investable commodities. Reminder of what we're looking at the weekly chart. We're in quite a wide range between 16,800 and the all-time highs 20,075. Two nice touch points here. We've got multiple touch points around this 38.2% Fib retracement level. A little reminder, that's from the swing low back in December 2015. So these are pretty solid levels we're looking at. We're mid-range, but last week's candle was negative. It was a bearish outside candle. It did look rather aggressive at one point, but managed to pull back towards the end of the week. But this week, we're still on the back foot. Looking at the daily chart, we're in a downward trending channel. We've just retested the top of that channel, also the 21-day moving average, which is a nice little indicator. When price is below that, it's bearish. When price is above it, it's turning bullish. 4-hour chart had this nice little correction, but this could turn out to be a bear flag. So we're watching this quite closely. And on the hourly chart, drilling down to that, the shorter term time frame, we did manage to spike above the top of this channel. Yesterday, I went short on the gun to head trade idea. Still feels like it's moving south. It feels like we're going to test this 1810 to 1800 to 1787 level. So I'm still negative on gold in the short term, especially with the sort of like dollar strength still in the background. So watch out for this one. Still negative overall. Really support coming in at 1815 all the way down to 1805. And remember, we had that spike low over here, 1787. That's gold. Crude oil remains on the back foot. We've got this evening doji star formation, which formed on the weekly chart. That was negative. We said it was negative, and we're actually breaking down below this really nice trend line that we had from the lows of November 21. We hit a touch point in December, also in April and May this year, and we're breaking down below it. So that's negative. We've broken down below the week of the 16th of May lows, also targeting and moved further down towards, well, getting below this $100 level, which will be quite key. It's a good psychological number. Below there, the WTI crude oil has support around $92, maybe some interim support around about the $97. So negative on crude overall after breaking out of this daily channel. You can see it's here. 21-day moving average, reminder of that. It's a really decent one to look at on the daily charts. 21 days, average days in the month, I suppose. And yeah, looking pretty negative. This reverse trend line, we're down below it as well. So a really poor day from an oil perspective. But maybe that's a good thing for us consumers out here.
Definitely.
Trying to sort of like make our way through this this really difficult inflationary period, which isn't being helped by this type of commodity.
Steve, would you mind taking a quick look at copper?
Copper, call a copper. No worries, mate. Oh, yeah, not looking too clever. We saw on the weekly chart, we saw this bearish engulfing. That's 2 weeks ago. Last week was a really negative day, took out the swing low from the 9th of May, and we've had follow through here. Decent support.
Bit of a top. Bit of a top.
Yeah, definitely a bit of a top. Trying to get sort of like a decent support level around about the 395 level. I think we mentioned that level before when we were sort of bouncing off these here levels. Potentially a double top if it closes below here. We can see this. Where's the little? Here we go. There's the little down markers. Well, you can almost say it's potentially a triple top. Triple top. Let's call it a triple top, because they don't have to be exact. Technical analysis doesn't have to be exact. It's a real guide. So the double top here, potential was a break of that one, and you've got the treble top and the swing low in between. This is the lowest point. This is the neckline. We're breaking through it now. So this,
and that's on a weekly, right?
Yeah, this is $4 level we talked about last week, been quite significant. The daily chart obviously smashed through this 404 support, and look at that nice little downtrend. What we got on the 4 hour, that'll be below the Ichimoku cloud, and looking really aggressive this morning. So yeah, copper prices. But I suppose if we take a look at where they've come from, let's get a Fibonacci retracement on there and get some decent lines on there.
38.2. There it is.
38.2 on the nose there. That blue line there, this one blue line here, comes in at 388. So we would expect to see some kind of stalling, some kind of support around there. It's just a natural retracement level for markets. So although it feels like it's had a real rocky road, real sort of like slam dunk, it's only a 38.2% retracement. Not that bad, really.
I mean, the top looks
61.8.
scary though, doesn't it?
Yeah, it looks like a really nice. It'd be lovely if this was a little bit higher, giving us a nice clean head and shoulders. But you know,
So measured move
never
on
know
that.
what
What are we
you
thinking? Down to 78.6 maybe?
want.
Potentially?
Yeah, I would sort of say look for something along these lines. I know it looks a little bit naughty. 280, sort of in front of the 78.6. Would, you know, if we get a close below this 38.2 support, then yeah, why not $3? You know, that's not a bad pullback from the highs. You're looking at a real decent sort of like pullback from them $5 highs, was it? Yeah. Nice little reaction then in the commodities. Let's hope it calms our inflationary pressures down, as I say.
Let's hope so. Okay, thanks for that, Steve. Let's take a look at FX then. So dollar index very much on the front foot this morning. We were negative throughout most of the session yesterday, but reversed it, posting this nice looking reversal candle on the daily chart and posting green today. So looks set to maybe challenge the highs again at 105.78. No slowing that for now. Based on the weakness that we saw yesterday, there was part of me that was thinking maybe we're going to start topping out on the dollar index, but been proved wrong there. The trend is still very much bullish and still looking as though it's going to continue moving higher. Take a quick look at Euro USD. Obviously, flip side of what we've just seen on the dollar index. Potential for that looking a little bit stronger yesterday, but it gave up those gains and we're on the back foot again today, engulfing all of yesterday's gains and potentially set to revisit these lows down at 103.30 to 103.40-ish, kind of that zone. So not looking great at all overall, still favouring US dollar over anything else. Just coming back to what Steve's gone through on the commodities, obviously there are a couple of currencies that are heavily linked to the value of commodities, and they're most notably the Aussie dollar and the Canadian dollar. If we take a look at the Aussie, we can see that that is failing at the moment, so potentially forming a bit of a top here. And potential for much lower prices if this breaks the low here at around 88. 88.84. If we take a look at Aussie Swiss, we've seen quite a bit of strength in the Swiss franc of late, and that's obviously impacting this too. So engulfing all of yesterday's gains, big red candle as things stand at the minute, down almost 1% into a 61.8% fib level. So we need to see the buyers re-emerge at some point here. We saw a break of trend, so potentially we're going to get a retest here. If it doesn't, then we're looking for much lower prices potentially. A couple of people looking at Rio Tinto there. I guess that's because these commodity companies now are starting to look a little bit fragile, given the fact that we are seeing weakness in a lot of the metal prices. This is Aussie Yen, engulfing all of yesterday's gains, so that may be worthwhile keeping an eye on. Still overall looks pretty strong. If we take a look at Aussie US dollar, apologies for the drawings there, but we are fast approaching key support here from this previous swing low that we posted back in May this year. That's at 68.30. If that breaks, then there is a hell of a lot of fresh space for that to move into on the downside. So a combination of weaker commodity prices and a stronger dollar looks as though that could continue to impact this particular market. If we take a look at the New Zealand dollar currencies, again, there's a bit of link there to commodity prices. We can see overall this still looks pretty bearish. New Zealand dollar Swiss franc was the interesting one for me today because it's taken out this key low from February the 3rd at 60.76. That's a horrible looking candle this morning and is a pretty decent breakout to the downside. Looking at dollar CAD, that remains pretty robust overall. And if we look at dollar Swiss, not really much happening following that big pullback that we saw last week. And finally, if we take a look at dollar Swiss, that continues to trade at new highs. New highs made yesterday at 136.63, and no signs of that slowing. More yen weakness. More commitment stated overnight to the ultra loose monetary policy in Japan, and obviously coupled with the dollar strength, that is running away to the upside. Okay, let's move on to the indices. Let's first look at the ASX, just because, again, the links to the commodity prices are very key here in this market. And it's a similar situation actually on the FTSE 100. But we saw some evidence of buying support at the 38.2% fib level here at 64.12. We saw 3 consecutive days of gains, but we're doing our best to wipe out those gains now with the weakness that we're seeing at the moment, down by almost 1.5%. So if we get a fresh challenge of this 38.2% and it fails to hold, then we're looking for lower prices down towards 6,200, and then maybe the 50% fib level, which is down here at 6,031. Okay, looking at the German market. So this remains under pressure. It's been trading in a bit of a sideways range for a number of weeks, but we saw a decent breakdown here on this candle on the 16th of June. That then brought this level or this range into play as a resistance level. And yesterday, we saw prices rally into those levels, to the underside of these fib levels, and the price action that we've seen here over the last few weeks, and failed pretty nicely indeed. So a big shooting star candle there, backed up with further losses this morning, down by 1.7% as things stand at the minute. It's not the worst performing market. As you can see here, the CAC's down almost 3%, but we're again facing support at this 78.6% on the DAX, and these swing lows that we posted on the 16th of June. If they fail to hold, then it looks as though we're heading back down towards these lows here from the 7th of March. So looking pretty rubbish really for the DAX on the bullish side of things. It looks as though more downside is set to be seen. Just while I was on the CAC, that caught my eye. Being down 3%, not entirely sure why. It may be down to the constituents within the market there, maybe some big losses early on. But we've got this key swing low here from the 7th of March at 5,755, and you would be a brave man to bet against a retest of that in the very short term. Looks pretty nailed on to get down there, I reckon. Let's take a look while we're in the European markets at the FTSE. A really nice rejection at resistance here yesterday. We saw some green, but it failed into this range here that we put on the daily chart. And we're posting an engulfing candle today, down by 1.2% as things stand. We did come up just short of the 78.6% fib level on the 20th of June, but I would probably bet on a move back down to that level, and then maybe down towards these previous lows that we posted back in May. Over to the US markets, we saw a little bit of relief yesterday, but it was very short-lived. We closed off of the highs of the session. We've still got this gap here on the Nasdaq that we haven't filled at 11,800 or so. So that potentially could attract some buyers taking it up to that price, and then a good opportunity for the sellers to get back in and drive it lower. So it's in between fib levels at the minute, the 50 and the 61.8. Obviously the pressure remains on the downside. As we can see here, the trend remains pretty negative. We're engulfing yesterday's gains, so I wouldn't be surprised if we do get down to this 61.8% fib level at some point. I'm going to wrap up with the S&P 500. We're engulfing all of the gains that we saw yesterday. Failing to really make any headway. The US had a real good chance of driving this up following the holiday weekend that they've just had, to sort of test the appetite of the bulls, given that we've seen such a sharp sell-off, but they didn't come to the rescue. It's a really mild bounce, and we are looking for lower prices down to the 50% fib level at 3,500 on the S&P, and the measured move of this head and shoulders top, which comes in at 3,333. So that's what I'm expecting to see over the short to medium term.
Yeah, I tend to agree, honestly. We'll jump into some stocks in a second, but I read yesterday that the starts of this year has been the second worst on record for the S&P, I believe, behind, I think, 1933 or something, for the first 100 and how many days we've had. So I think that's probably...
right?
Yeah. I think I read the other week, this is the most severe correction ever on S&P, ever.
So we were talking on Monday, Steve. It still doesn't feel like people are taking this seriously, despite it being a monster sell-off.
Yeah,
it doesn't feel like there's been enough of a flush out in the market.
Yeah, I think for most people, it doesn't feel like a monster sell-off. It sort of just feels like a bit of a correction, and the buyers are going to come in because they always do. But remember, the Fed no longer, or the central banks are no longer buying. So hands up, who wants to go first?
Yeah, be a short list of people. But we did get a bit of a relief yesterday, as you say, despite the fact that things look like they're turning around this morning. But we'll quickly have a look at our biggest gainer and loser. Firstly, checking out Box. I don't care for it if it's up 23%. That has no interest to me at all. But it's worth noting. We check it out when it's fading. So up 23%, still nothing really here. We need to see a bit more of a bottoming pattern before we care about that at all. Check out Revlon as well. This is our biggest gainer yesterday, and it was up another 62%. Up another 62% in yesterday's trading. You can see the volume is still huge on this. So obviously let's see if we've got any update. Company surge, post bankruptcy gains. No, it doesn't look like any update really from what we saw yesterday. But yeah, I mean, the volume is really interesting because we said how big it was yesterday, 146 million, but now we're up to 186 million shares traded yesterday. So a lot going on in Revlon. But our biggest gainer for today, and I was looking at this chart and I thought, this doesn't look like a biggest gainer. It's down here. But no, if you scroll up, it's this tiny little doji candle here. Let me highlight it. You can barely see it. I mean, I've got my glasses on. That's not a very good circle. Look at that. That's a candle right there. Honestly barely see it too. But yeah, so this is Convey Health Solutions Holding, up 138%. Let's see if we have any reason why. Here we go. Convey Health said it signed an agreement under which TPG Capital, its principal shareholder, will acquire all of the outstanding shares of Convey not currently owned by TPG for $10.50 per share.
I was hoping there'd be some funky drug in there that you needed to pronounce.
No, there always is, but not on this occasion. Not on this occasion. But we do have to check out our biggest loser, which is it's pharmaceuticals, of course it is. Down 33%. This is Acadia Pharmaceuticals. We'll just assume there was a drug or something that failed. Fine, I'll have a look at it. Where are we? Acadia plunged 37% Tuesday, sinking to its lowest share price since March 2013 after US Food and Drug Administration advisory panel concluded that companies... That's not a word. I've never seen it. It's not. Pimavanserin drug
Pimavanserin.
Yeah, obviously. Stupid me. Did not effectively treat hallucinations and delusions in patients with Alzheimer's disease. So, yeah, we do like looking at these pharmaceutical ones. It's always a good laugh for everyone but me. Checking out the stock heat map for yesterday, you can see we did have a bounce, and it's pretty clear just by looking at this heat map. The only real notable thing that didn't have a good day was Meta Platforms, which was down 4%, really being the only notable bad day out of the S&P. We'll check that out in a sec. Actually, you can see Netflix down here was also down 2.5%. This little one here. But notably on the upside, Tesla was up 9.35%. We'll check that out in a sec. Google was up 4%, Apple up 3%. So a pretty good day overall, but it looks like, as we say, we are failing to hold those gains this morning. Let's check out a couple of these now. Coinbase was up 12%, starting to feel... Let me put on this moving average. It's a 21-day moving average. I was listening to Steve. Yeah, up 12.24%. We've filled this gap we had here between the 10th and the 13th of June. We still have a gap open between the 9th and the 10th of June, which would coincide with the 21-day moving average. Quite interesting at the moment. We've got kind of two key levels for me on Coinbase, if I can get it to... There we go. That's the downside for me, and then the upside, if we get rid of this pattern here is this 81.78. So we're trading within this range at the moment. My bias would still be to sell into rallies as it stands, but yeah, I'd like to see a break in either direction to have a bit more of a sense of where we're going with Coinbase. What else do we want to have a look at? Roblox? Nothing? No, nothing. To me, let me clear this up. This is a mess. When we're in a downtrend like this, like we've had with Roblox for so long, like this kind of move doesn't really excite me. The only thing that is slightly better on Roblox now is it does seem to be trying to put in a higher low here than the previous low, which was back in May. For me though, if we do get a break above and we extend this out a bit, we can around this $35 level, that would start maybe changing it around for me, because that would be kind of a double bottom. It's not completely clean, but it would have that sentiment to me, and potential for a push higher. We do have a gap open here between in February, so maybe look to get that close at some point, but it's got work to do still. Tesla we want to have a look at, had quite a nice day. I've been doing some extra annotating on Tesla recently, and the next key level is the 790 resistance, which we've got marked here. It looks like this 650 support, it says there, but it's more like 630 actually, has held up. Potential for a bit of a double bottom if we do get up to these levels and break higher. But as of yet, we're kind of in between a little bit. So I'll be waiting to see how it interacts with this 790 resistance. What else do we want to check out? Let's see. NEO. We've looked at NEO a little bit recently, and it continues to move higher. It's moved through this resistance level, which we had here, and actually gapped through it quite nicely yesterday. So we can change this to support. And then where are we looking to go next with NEO? Let me get rid of the volume. It can be a bit messy. So we had a bit of a double bottom pattern play out here. I don't think it's actually completed yet. I think we've still probably got a bit higher to go. I think this swing high here, I expect to see some sellers coming in at that point. Let me make it red. There we go. Red for resistance is how I like to do things. I expect some resistance coming in at this point. Perhaps it'll retest of this prior resistance level, which is now support. But things are looking much, much better on NEO, actually. I mean, if we get this double bottom play out, which would mean a break of here, where could we be looking? On a conservative target, we'll take from here, extrapolate that out. Where are we going? It looks like we're heading up to around these $43 levels, back into this prior resistance up here. So if that is to play out, that would be a nice recovery for NEO. This is a logarithmic chart. Do have a gap open on the downside as well, actually. So a lot to keep an eye on. I think that's the key level, though, for me for NEO. A break above that, and we're perhaps looking nice. There we go. Not too much more to say. Google had this nice 4.11% move, trying to fill some of these gaps up. We do have a gap here that needs to be filled at about $2,300, $2,300. We're looking like we're heading that way, but we'll see how the market reacts today. Don't think there's too much else that really jumped out to me.
What happened to Meta, Jamie?
We did look at Meta. Let me see. It's going to be all the way at the bottom here, isn't it? Yeah, we had this big outside day engulfing candle. Let's see what the volume was like on that. The volume's picking up, so that's not looking good at all for Meta. Let's have a jump in.
No, not really.
No, nothing.
I know. The Department of Justice said reached a settlement agreement.
Okay. Resolving allegations of discriminating advertising by Facebook parent company with its housing advertising. Okay. So yeah, I mean that's not a good candle to me, especially when the rest of the market's doing well. If you're the one that's lagging behind, it's like if you can't even maintain any gains on a day where the rest of the market does, that is not a good sign. Where could we be heading for Meta here? I think the next reasonable target, let's have a look, probably around these kind of levels here. It's been tested back in, this is the pandemic lows down here. And following that, I think we probably, again, you can kind of target the next real swing lows. I think it's a reasonable thing to look at. There's not a lot standing between where we are now and $10 lower, so I think that's a bit of a given at this point that it will eventually get there. But where does it really hold up? If we zoom out a bit more, let's make this a monthly chart. Let's get in some fibs from the all-time lows. What have we got here? Where am I going? Here we go. Right, so I'll get rid of these red lines so it doesn't confuse us. We've got a 78.6 fib down there. We'll chuck them all in just so we can see what we could be targeting. We're through the 50% fib. We tried to hold that. It's breaking through, and you can see this monthly candle actually has been a bit of a nail really, because we're closing below all these wicks. We're now quite nicely at the, let me get rid of these, at this 61.8% fib. So we'll see if that can hold. Actually, this is quite a key level. We're already out on a monthly, because where we looked at the weekly charts, and you can see we actually did close below it on a monthly time frame. We wicked off this 61.8 fib. It wasn't a 61.8 fib at the time, but we haven't had a monthly close below it, is what I'm trying to say. So if we were to get one, and we've still got how many days left? We've still got about a week or so left of this month. So that could well happen with how price actions look at the moment. We broke out of this symmetrical triangle we can see here to the downside. And I think there's probably room for a bit of a move lower. So if we get closed below this, I don't know. There's a lot of open field on a longer time frame. Wouldn't surprise me if we did get down to the 78.6 fib and perhaps even lower. So interesting times for Meta. We'll keep an eye on it, but certainly not a good sign when you see the rest of the market doing well and Meta lagging behind. So we will call it a day looking at stocks there. It looks like this bounce could have been just a one-day job, as the indices are looking lower today. Yeah.
Cool. All right. Thank you, Jamie. So the next step for us is to look at the gun to the head challenge. I think it's going to be a real challenge today, because there's already some big moves in the market that have taken place. So we'll do our best anyway. But just to reiterate what it is that we do, we come up with 3 trade ideas on the spot on the video. Each idea must have a stop and a target. All the ideas are placed at market. We close them off at 9 p.m. UK time, or when the stop or the target is hit. Now, if anybody wants to follow these trade ideas, you can do so by checking out our TradingView profile, signal_center, and you'll see them all here. So yesterday we had 3 trades. I went long of euro dollar, expecting a bit more of a follow through to the upside, but I didn't really get it. At 9 o'clock I was around 0.6R offside, and it's then gone on to hit the stop. Steve, you were the only bright spot again yesterday, as you are always anyway, but that was a short trade on gold, and despite a little bit of initial volatility, you managed to hold on to a half an hour win yesterday, so well done to you. And done. Jamie, you were buying dollar CAD. Again, a bit of volatility, but you were actually a little bit down
Sterling
on
CAD.
that one.
You said, yeah, Sterling CAD.
Sorry, Sterling CAD. You're a little bit offside on that, but it's moved pretty aggressive to the downside on the back of the inflation number in the UK today. So we clear down the decks and we go again. Who wants to go first? Because I'm really struggling, I've got to be honest. I don't mind. Go on in.
Okay, I'm looking at the Aussie 200. Did the RBA actually raise rates this week, or did they leave them unchanged? I can't remember, Joe. I think it was this week. They talked about they will be raising rates, but I don't know if they actually did anything this week.
No, I'm not sure they did.
I don't think they did.
Yesterday morning, wasn't it?
Yeah, I think that. Oh, yeah, Monday morning or Tuesday morning. Yeah, I think they're a little bit slow to react, really. So I think this is impacting on the Aussie 200. Obviously, you've got the commodity prices, obviously influence here as well. They're taking a bit of a hit. So we're seeing this negative price action breakthrough. Looking at the weekly chart in the Aussie 200, looks like we're heading back down to this channel of 2A price action that we saw all the way back in start of the pandemic, or sorry, just after the pandemic started. So yeah, looks pretty negative. Broken decent support on the weekly. Daily candle forming a bearish outside candle, or bearish engulfing candle actually at the moment after 3 positive days, so that's not good. And also we've got this previous support around level here. We seem to have tested it and reacted lower, so negative 12 hours of price action from that 65.82 level. So I'm going to go short on Aussie 200 at current levels. Let me just line it up. It does feel a little bit like we're at the bottom. We're going to get a little bit of a relief rally before we have to see the sell-off this afternoon. So yeah, timing doesn't feel great on this trade idea, but we'll go with it anyway. So I'm going to keep the stop pretty tight to get some nice risk reward out of it. It's a 5-to-1 risk reward. I'm selling Aussie 200 AU 200 AUD on this chart at 64.94 and a half. I'm going to target a move to 61.94 and a half. You know what? I'm not going to go that aggressive. I'm going to look a little bit more reasonable target for a daily intraday trade idea. 62.54 and a half. Stop will be at 65.54 and a half. So only a 60-point stop against a 240-point target gives me 4-to-1 risk reward.
Steve.
Nice one.
Jamie, you got one ready?
Yeah, I'm happy to go. I'm looking at the euro against Canadian dollar today. What I'm seeing is a bit of a toppy head and shoulder we've got here. We've got this left shoulder, we've got the head, and we've got the right shoulder, which is actually a little bit lower than the left shoulder as well, which I always like. It did attempt to break through back on 21st, so that was, yesterday. I'm looking at a 1 hour chart. But it's chopped around, but I'm kind of hoping, that this is just a bit of noise before we do get a bit of a move lower here. The measured move target of this head and shoulders pattern takes us down to around this take profit I've got here. So this gives me quite a good risk reward. I can keep my stop just above this little swing high here as well, just in case it does whip around a bit before moving lower. So my trade of the day today is going to be selling euro against Canadian dollar. I'm going to be selling it at current price, which is 136.15. Where are we? 136.15. Let's get that right. Which does make my risk reward slightly worse, but I can probably tighten up the stop. My take profit is going to be at 135.35, and I'm going to tighten up my stop just a little bit to, let's move it down here, just above this breakout candle here, at 136.41. So this gives me quite a nice 3.08 risk reward. Hoping for this head and shoulders to play out and for the euro against the Canadian dollar to move lower.
Nicely done. Okay, I'm going to take a look at sterling versus New Zealand dollar. So on the daily chart, there really isn't much to see here. Really quite choppy in the very short term. But looking at my watch list today, it's littered with massive moves already. So I'm struggling to find anything that I really like. This is up 0.4% as things stand. I was looking at the intraday charts, most notably the hourly, and what I noticed was over the last hour, it's posted a pretty tasty looking engulfing candle and a close through the 10-period moving average, which for me is always a bit of a momentum trigger when looking at charts in the short term. So I'm going to try and take advantage of that and sell at the current price of 194.52. Yeah, that'll do. Stop loss just above the highs at 195.49 and a target down at these swing lows here at 192.57. So just a shade over 2R on that one. I normally like to look for much bigger returns, but my eyes aren't seeing much value right now on an intraday basis. So that's my trade of the day.
Nice
and that's going to be published right now to TradingView. There we go, ready to go. Boom, published. So if anyone wants to check those out, feel free to do so.
Very nice.
Okay, data today, obviously pretty important at the minute because there's lots of central bank action going on, lots of commentary that's impacting markets. First up, actually, today we have at 1:30 UK time the Canadian consumer prices. At 2:30, we've got Fed Chair Powell testimony, so that'll be well watched. Typically, these moves, these meetings are actually after hours, so it'll be interesting to see how that goes down around the US Open today. And then tomorrow morning, UK time 8:30, we've got the German inflation data, the German PMI index flash reading, so that will be well watched as well, and is likely to impact anything linked to the euro, obviously with Germany being the largest economy in the Eurozone region. Anything further to add, gents?
No, all good here.
No, all good.
Be careful out there.
Be very careful. You've been warned. Okay, guys, have a great day. Thanks for watching, everybody, and we will be back tomorrow morning. Goodbye.
Cheers.